Welcome to Trading Lounge and the gold silver report for the 19th of March. We'll be looking at gold and silver in terms of bullish counts and also bearish counts. So this is the bullish count that we've got, which is the WXY down to this current low here. And we would need to look at this as wave 1 here and wave 2 here and wave 1 here and wave 2 here, and that means that we would need to see a stronger move above the, well, that's the 50 and the 61.8% retracement level at 1743. So getting support on 1743, better still 1745, would be the bullish move from that point there. But we also need to take on board the bearish count for this market as well. So let's look at that, and we'll come back to the bullish count as well. So the bearish count is still like, well, I've got two bearish counts actually. So this one is 1 and 2 here, and 1 and 2 here, and 3 here, and 4 here, and that's 38.2% retracement level. So I was hoping that we were going to push above the 1750 here, the midpoint, the 50, to secure support, but it's not the case. And it's possible for this to have this leg down to 1650, which is the medium level, then another bounce back to the wave 4 of 1 lesser degree, and then another move down coming in to finish it off. There is another possibility that this could finish in terms of just one more move down, which would be this one here, which is ending in 3 waves as a wave A, an A, B, C for the B wave, and 1, 2, 3, 4, and 5 down here at the 1650 area through here. So we really need to, it just depends on how we want to view this situation here. In this case here, we could view it like this. The A wave here, the B wave here, and the C wave here for wave 4 here. And then moving down in 5 waves for this structure here. So in a nutshell, it all boils down to, from that high to that low here, that's the 50-60% retracement level. So we need to be above that. Let me just double check that. Pretty close, good enough. So we need a tested support on that level there, on that price point of that. I think I'll just put that up a little bit higher. Actually, there will be a problem at that point, but the 43 will give us the group 1. Let me just check on where the 78.6 is for this. Yeah, it's much higher at the 50, so that's another story. So what we really want to see here to be long at this point is we would need to see, I suppose we could use the 40 really. I think I will actually in this case, because gold's got a good habit of pulling back to the 50%. So that's and it does tie in nicely with this little area and this area here. So it is the closest, largest number. So look, to go long, we would need to see a classic trading levels pattern here, the arrival, the reaction, the first high above the level, you know, the routine, the ABC pattern, and then this becomes the catalyst for the trigger at that point there, and that would need to move up through that. Otherwise, we're going to fail at this point, and we're going to move down strongly from this point down into wave 3, 4, and 5 here. So that's the problem at this stage with gold. So it really just all boils down to what happens next in this area through here. So this is the bullish side of it here, which is the same story, which wave 1 here, wave 2 here, 1 and 2 in here, and 3 and 4 and 5 here for 1, and back for 2 here. and then finding that space, the 1740, as the support. And we need that classic trading levels pattern. Which looks like this here, which is, if that's the 1740 there, the arrival, the reaction, the first high above the level, that's the reference point that you need. Then a correction, and then getting support. There is a variation on this where we don't come back below the level here, and that's quite possible in this case. So it would be like this, but we want that first high, so don't go chasing that one up, because you'll only end up coming back to that point, and you're exposing yourself unnecessary at that point. The breakout's important, but the retest is more important. Well, they're all important, they're all part of the process. So look, for this video, what it really boils down to is the 1740 or 1741 really becoming the support or the resistance. So we just really need to allow that to play out at that point. Let's check on silver. So with silver on the 1 hour chart, it's much more corrective in its terms of being a move to the upside. So from the low here, this move up through here, it's just a series of 3 waves, unfortunately. So we've got wave A here, wave B here, and 1 and 2 in here, and 3 and 4 and 5 as we've counted up before. We've had the A, the B, and the C here. And then we've also got 5 waves in the A wave here, the B wave, and 5 waves in the C wave here. So yeah, it's a little bit, there's more of a bias on the bearish side here, unfortunately. So I think we just check out this little section here, because this would be the 1 and the 2 coming back into this space and moving down lower from this point. So short trades can really go under this low here for that. I know we've had long trades in the market, but we've been stopped out on those, unfortunately. So that would be the short side. So the market is trending up and it's having a go, but it's just difficult to count it as an impulse wave. I just can't see it. Let's just go check this out here. We'll have to check that out in detail. So I'll just go to the 20 ticks. So where are we? So we're up from this point. Let's just see if we can figure this out here. First of all, which is the top there? That's the top, so we've got to work from that one. And we're going to need some of these. So that would be, it's got to be wave 1 and wave 2 there. That's the start. And we'll need to count further at that point. So we can count 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5. ABC for 4, 5, which will be 3. How's that looking? Yeah, that's okay, isn't it? And wave 4, ABC for 4, and very clear 1, 2, 3, 4, 5 here for that. And it looks like we've got this as corrective here in 3 waves, so that would leave us back up at, that's right on the 61.8%, more close enough. So that's the resistance zone here. That's the ABC pattern. And then we're looking at, it looks like we're looking, and of course we've got this down here as 1 and 2 and 3, 4, 5 for here. So it is looking rather bearish here to here, roughly. So that brings us up to this point. Can that be anything else? That's the other question. Just check on that. That's all right. I mean, it's definitely, we've got 5 waves down here. It's looking rather impulsive up here, I have to say. 1 and 2 and 3 and 4 and 5. So we may end up seeing something like this here. But it does leave, in terms of shorting, just by the way, it does leave that low there as the short. I don't know what that's doing there. So this is all about the 2600 at the moment. Then we've got the sub-levels here of 10, 20, 30, 50's already there. So would only be bullish on this if the 30, the top of group 1, became the support, which it just doesn't look like that's going to happen because of this impulse wave to the downside. And this, I mean, I can see that this is the junction here, do you know? So that's all part of the same leg, and this is all part of the same leg, and this is the junction in here. So it's got to be an A and a B and a C in here without counting that coming back to that 61.8%. So that's really looking bearish, unfortunately. So just coming back to our hourly chart here, because I don't need to go into the bigger picture with all of this. It's really, this is our puzzle here that we need to figure out. So it does appear that this is bearish to this point, and we can look at that here probably as wave 1 with wave 2 back to that point. Yes, which still leaves that low there as the trigger. I mean, I suppose we could look at this as a running flat correction here in terms of, you know, looking at this as wave 1 and wave 2 here, then wave 1 and 2 here. Well, not 2 here. The 2 would go over to here, and this would become the A wave here, the B wave over here, and the C wave here. So that's a long shot, though. It's a very long shot to have that running flat, which is, you know, normally in a wave 4, not a wave 2. So that's another issue there with that. But I don't see any other way that we could look at this. And otherwise just overlapping wave structures. I mean, 1 and 2 and 3 and A, B, C for 4 and up for 5 here. That's possible. Just looking at this. So the other point here is if that was possible, then we wouldn't want to see the market below the 2550 here in that case. So that's just something to be aware of at that point. Also, just be a bit careful when you're short here on this trend line too, because the way that trend lines work, as you may know, is that they work like the levels, classic trading level pattern too. So that will come down, hit it. Well, it's already bounced back there. It's already bounces back. So it already hit it, bounced back here, coming for the second here, bouncing back again here. So it's really done a couple of bounces. But eventually, when they go through, they'll go through and they'll come back and they'll test that line again. And then they'll drop. But sometimes what they do, you have to be a bit careful, is they'll come back and they'll check it a second time. So just watch your stops on that one. It's a little bit rare, but it's enough to warrant me saying something about it. So don't get your stops too close if you're going in that direction with that. So that's how you can short this here as well. So, I mean, yeah. All right, guys. Well, yeah, unfortunately, I mean, I'd like to I like to breathe hope, but I don't like to leave people astray either. So so I have to state at the end of the day that this rally for silver really appears to be corrective. So we need to watch any new lows will pretty much start to confirm that. So let's just see what happens in the next session, shall we? I mean, the other point too is with all of this, of course, is that the 10-year yields and others, you know, they've gapped up. You know, this is what's pushed this market down. So the yields would be, well, gold's biggest enemy, I'd imagine. I'm not a full book on the fundamentals. I'm just a patterns person, but those yields pushing higher up at 1.7, 1.76 or something, you know, is really applying a lot of pressure to the gold market here. We can have a look at the dollar as well while we're here. There's not much to be. Well, I've started a bit of a story with the DXY, the dollar index, and from the low over here, I was looking at it as, well, an A wave, a B wave, a C wave here for the A wave, an ABC here for this. And if it's a B wave here, it can finish in 3 waves up here as a WXY, but I couldn't go there just yet. So unless it really overlapped wave 1 by, you know, an obvious amount, but otherwise 1 and 2 here and 3 here, and I was looking at this as an ABC for the wave 4 here, but then we got this thing here, so I still call it a wave 4 at this point. And with a move up here for the DXY, and yeah, and then rolling over from that point. So why this is pushing up there, it's not going to do gold any favors as well. And like I said, the yields are up like 4.5% nearly, so they've gapped up. These are the yields here, and I can still see they've got more to go up here as well. So we can look at this as wave 1 and 2 here for this, and 1, 2, 3, 4, 5 up here for this, and this, and this, and that. So they're still heading, the 10-year yields, government bonds are still pushing higher. So that's only going to apply more pressure to gold as well at this point. Alrighty. Yeah, sorry about the bearish news for gold and silver, but that's the reality. So just be a bit mindful. Righty, cheers.